Hello, good morning. Happy Friday to you and to my Christian brothers and sisters. Happy Good Friday to you all out there. And let's quickly confirm that we are good to go this morning. So please type in hi in the comment section if you can hear me and can see my screen. And let's get this started from this point, please. So I would like to see some feedbacks in the comment section, and let's kickstart the live session for today. Let's go. Okay, so what do we have right here in the comment section, please? Okay, I can see Valerie. Good morning. I still don't know what this bongono all means, but I want to assume that it is a greeting. Please confirm if it's so that and what language is that. Let me know in the comment section, Valerie. And I can see 799. Good morning, 799. Thank you very much for that confirmation. Hey, Carrie, how are you doing today? Good morning, and I'm very glad to have you around with us this morning too as well. On this note, I will take this as a feedback that we are good to go this morning, but I'll still need some confirmation. Please, let's get this activated here. I welcome you to another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market together using technical parameters to identify trading opportunities lining up for us today. In fact, today is a very important day of the week as we look forward to the non-farm payroll, which is a very high impact event that we are going to be looking forward to. So I want you all to stay tuned in so that you can be able to take advantage, use the informations here to be able to use it to take advantage of trading opportunities during the New York session today. And for those who are joining us for the first time, I've not forgotten you all at all. You're highly welcome on board. I'm so glad to have you guys around. And what we simply do here on a daily basis is to come together as a community with the hopes of identifying trading opportunities during the New York session. So we have series of financial instruments that we have been monitoring since the beginning of the week. So we come here to look at how well they are doing and how we want to be managing this trade ahead of the New York session. And I want to let you know here that it might look a little bit overwhelming at first because you're just exposing yourself to it. And I assure you that with time you get to understand how this works, and you will be able to use whatever information you have gathered here to make your own personal decision for when you're about to make your own decision on whatever trade you're about to take. So with that being said here, I want us to dive into the business for today, and let's kickstart the live session. Well, as usual, you know what we do whenever we start the day. We want to check the economic calendar to keep tabs with the fundamental aspect of the market. And one important thing about the fundamental understanding this macroeconomic event is the fact that it serves as a catalyst to drive price movement. So whatever technical positions we are making here today or any day whatsoever, we still need some catalyst that will drive price movement. So if we take a position, definitely we want price to move in that direction so that we can make money off the charts. And one of the things that could drive price action as such catalyst, like the macroeconomic event. So what I normally look at are the high ones, high impact ones. And for today, Friday, April 7, being the first Friday of the month and the last trading day of the week, we have the non-farm payroll to look forward to, which is coming up in about 2 hours from now. And what the non-farm payroll does is actually a statistic, is actually an index released by the US Bureau of Labor Statistics, and this indicator presents the number of new jobs created during the previous month, and this is peculiar with all non-agricultural business. And this is a very high impact event that everyone in the market is looking forward to in order to make an informed decision of where they want to be going. Is it bullish or are we going bearish on this one? And if you look at the data that came in the previous month, we had 311,000 job opportunities, and for the consensus here we have a projection of 240,000, which is what economists are thinking will be published for this month. So we anticipate this event to look out for the actual data. So is it going to be below expectation? Is it going to be beyond expectation, or is it going to come in just as expected? So these are things we are going to be looking forward to today to be able to know where we are going. But during the live session today, we are going to be positioning ourselves ahead of any development that comes in from this data from the NFP. So with that being said here, let's dive right into the chart to start the day with. Now, as usual, the first commodity we always look at is the USOil, but with the look of things right here, it appears that the market is on hold at the moment, and I'm of the opinion that this is as a result of the public holiday that is being observed today. So we are at a standstill here, and if you had noticed, you will see how the market has been on a consolidation phase since the beginning of the month. As we can see, price action had continued to trade within the $81.50 level and the $79.50 area since the beginning of the week, to further emphasize that there is a level of indecision in this market. And actually at the beginning of the week, we were expecting that there's going to be a huge bullish move following the OPEC Plus decision to cut oil production, but it appears things are not going as expected, and we might likely see price action do a retracement phase before that bullish move happened. But what we saw here yesterday during the New York session was quite interesting, as we finally saw price action break out of that bearish trend line, which we said we shall be using to guide our trading activity for the week. And one thing we saw here, we saw the breakout, we saw multiple rejection of that area where there is a high tendency that price will be going to the upside, breaking the barrier at the $80 level in the nearest future. But since today is a public holiday and the market is on standstill, then I will suggest that we skip the US oil. I just needed to paint the picture that we have right here before we move on to the next pair. So the next pair we are going to be looking at today is the US tech, and on the US tech, we have been bullish in the last 24 hours on the US tech. So let's quickly run through how the week started for us on this pair. So at the beginning of the week, we identified a simple channel where price action was trading within the 13,150. As you can see here, that was the resistance point for the week. That was the highest point price action was during the first I think first 20 hours of the week. That was the highest point price action was. And then we had a support line somewhere around the $13,070 level. So we had a beautiful flat channel here, and you all know from a technical standpoint, whenever we identify this kind of simple channel, all we want to be seeing is remain patient first of all and wait for price action to either break out of the channel to the upside for buying opportunity, or breakdown of the channel to the downside for selling opportunity. And the breakout of the channel did not happen until Tuesday, so that's like over 24 hours after the beginning of the session. So we saw the significant breakout here where price action broke out of that structure with a bullish engulfing candle, and in fact price action moved about 80 pips thereabout before this bearish move started to take us out of that position. And one thing we decided on that Tuesday's live session is that we want to see how price action will be reacting to the 13,150 level to decide what our next line of action will be. And we said if price action starts finding buy pressure above the structure in our lower time frame, we'll be in for another wave of bullish momentum. But as you can see here, that was not what happened, as we saw bearish momentum continue to the downside breaking down the trend line and resuming at a retest of the trend line to the downside, where it led into the breakdown of that support line that was on Wednesday's New York session. And you all know we had a sell stop order below that structure, and we were able to capture that move as price action moved significantly well in our favor. It moved about 170 pips before we begin to see this consolidation phase that was observed here during our live session yesterday. So let's run through what we were looking at during the live session yesterday. So during the live session yesterday, when we were anticipating the New York session, our center of focus was between the structure here around the 12,960 level and the 12,900 area, where we saw how price action continued to trade within that area, giving us a clue that there is an indecision in this market. And one thing I stated here yesterday was the fact that the structure here has a tendency of giving us a trend continuation pattern in the form of a bearish rectangular pattern after considering this impulsive move to the downside. And we were saying that a breakdown retest of that structure would have triggered our sell position. And soon as it triggered the sell position, price action moved about how many pips? It moves about 65 pips thereabout before we saw this bullish momentum, which took us out of that sell position. And I hope that when price moves significantly well, you did move your stop loss to break even to protect your position against any sudden pullback. And if you had done that, you would have been taken out from that position at a worst case scenario of break even. And as you can see here, we saw that the bullish momentum continued, and with our buy stop order above the 12,960, remember we had orders at both ends with the hopes that we want to catch any of this trading opportunity. So with the breakout of the 12,960, we had the buy position triggered, and currently price action is still trading to the upside. So at this point in time, we have about 90 pips in profit if you are taking advantage of that bullish momentum at the breakout of that resistant line. So well done to you for being on standby to have caught that move. Now, the next thing we want to be doing, you all know what we want to be doing right now. We want to ensure that we secure the current position by moving our stop loss accordingly to lock in some profit. And from the current structure we have here, the most appropriate area I think that we could move our stop loss to is the structure just right above the $13,010 level, because we have a structure around this area. So let's give room for price action to breed with the hopes that price action will do a further breakout of the 13,070. So move your stop loss accordingly. We want to ensure we protect this position, and let's dive into what our expectation should be like for today. And one thing about the current structure here, let me zoom back out into what has been happening here since the beginning of the week. Well, remember that we have this bearish trend line, which actually has been supporting this bearish momentum since the beginning of the week, and that is the trend line you can see at this particular point in time. So when we connected the series of lower highs, we have this bearish trend line, which I just highlighted here. Please don't mind the wobble line I just drawn on my screen right now, as I couldn't get the perfect contour of this highlight. So please don't mind that, please. So that is the bearish trend line that we have been using since the beginning of the week after connecting the series of lower highs here. Though we had a breakout of this trend line I think on Tuesday morning, but we saw how price immediately dropped back into the structure, and since then selling pressure has continued to respect that bearish trend line in the last 4 to 5 days. Now the question for today now is, will the trend line continue to hold the bearish momentum here, or are we going to be having a breakout of the trend line where that will signal the potentials of the buyers in this market, and the trend line may no longer be strong enough to hold that bearish momentum? So these are things that we are going to be looking at during the live session today. Now, if you look at what has been happening in this market since the later part of the New York session yesterday, you would have observed a consolidation phase just right below the $13,070 level, which is more or less characterized by a lot of selling pressure around that area. So look at what happened here. We saw selling pressure. We saw how price action tested the $13,070 level, which also shares a confluence with a bearish trend line. And since then, we have seen a consolidation phase just right below the $13,070 level, which more or less emphasized that there is an indecision in this market, as probably there is no liquidity because of the fact that major key players has withdrawn funds from this market, waiting for a catalyst that will give an informed decision of where to support. Is it bullish or bearish? Now we have a macroeconomic event coming up in a couple of hours from now, and this is one thing that we want to be anticipating so that we can position ourselves in such a way that we can catch any of this move that will happen today. So now the question today is, we have two possibilities. Is it going to be a breakout of a $13,070 level to welcome additional position to our existing trade, or is it going to be a situation where the sell pressure here will continue, where the bearish trend line will one more time be respected by the sellers to push price into that TP target zone that we identified at the beginning of the week? So these are things that we are going to be looking at. But before we can identify this, we need to take a closer dissection of this consolidation phase here to determine what is really going on. And in order to do this, I would like to scale down to a much more lower time frame, where I want to, hold on a second, I want to make sure that we have a clean chart on the lower time frame. So I will try to, hold on a second, just give me a moment please. I would like to hide all this one from the structures on the lower time frame. Okay, I think that is all I need. So if we go down to the lower time frame now, we should be having a cleaner chart. Beautiful. So we have a cleaner chart right now. So should we be using the 30 minutes or the 15 minutes? I think we should just go down into the 15 minutes time frame. Things looks a little bit better here. So there's a 15 minutes time frame, and that is the 13,070, and that is the bearish trend line we identified at the beginning of the week. So we are going to be having our line chart here, and then we want to confirm the support line, which falls exactly at the $13,040 level, which has actually been giving us buying pressure around that area. So we want to acknowledge that level and label it $13,040 level. I hope I'm correct there. So let's place it at the bottom right hand side of our screen. I think that's all we need here, and then we bring back our candle chart to see if there's some readjustment needed. Okay, it's just fine. Okay, so right now, as we head into the New York session, we already have a simple setup that we are going to be using to guide our trading activity for today, and that is the resistance line at the $13,070 level, which you can see on your screen right now, and the $13,040 level, which has been the support line here in the last 12 to 15 hours in this market. So you all know what we look out for whenever we have this kind of simple setup. We want to see either a breakdown of the channel to give us a selling opportunity in this market, or a breakout of the channel to give us a buy opportunity in this market. So if a breakout retest of the $13,070 level happens, we want to be in for another, oh sorry, I'm coming, by breakout retest of structure. So sorry about that, I'm just, all right, beautiful. So that's what we are going to be using to guide our trading activity for today. So it's a very simple setup we have here. So it's either price breaks out of the resistance line of a $13,070 level, then we could add more position. Remember, we already have a buy position running, and we have moved our stop loss to secure that position. And if a further breakout of the $13,070 level, it will be another confirmation for us that we are good to add more buy position to our existing trade. However, if price action drops below the $13,040 level here to the downside, then you will notice that price will be back below the bearish trend line, which has been supporting that bearish momentum since the beginning of the week, and that will be a sign that price action is about to respect the trend line one more time to the downside. So let's have our orders right above and below the structure so that we can catch any of this opportunity as we anticipate the NFP later on today. So it's a very simple setup. You just want to screenshot my screen right now so that you can use it as a reference point when you're about to make your own personal decision on the what's it called on the US tech for today. So if you have any questions, let me know in the comment section before I move on to the next pair. I think I can see a couple of comments here. Okay, 876, good morning to you. Glad to have you around. Cast, how are you doing this morning? Good morning, child weekend. Okay, 618, good morning to you. Susie MB, all right. I see your comment. 435, good morning to you too as well. All right, so in the absence of no questions, I want to assume that we are all on the same page here, as all I have said here is quite explanatory in that regard. So I will be moving on to the next pair right now while I check the comment section from time to time to see if there are any questions for me. Now moving on to the next pair, we are going to be looking at which pair is the next pair we are looking. Is it the GBPUSD or the XAUUSD? I think it's the XAUUSD. That's the gold. So we are going to be taking a look at the gold too. And on the gold, I'm of the opinion that we are not going to be doing much on the gold today because the gold chart has been on standstill since yesterday, and this is as a result of the public holiday that has been observed. So we can see that it has been on standstill. And let's run through how the week has started for us and what we actually did in this market. So we can see here that the week started on a bearish note initially, as we saw price action drop below the 1,971 into that support zone between the 1,957 and the 1,950 area. And since then, we have been seeing buy pressure resume, though we missed out on that opportunity as we missed the whole 400 pips move into the 1,990, but we were able to recover and catch some more 450 to about 800 pips thereabout afterwards. And the reason why we didn't actually thought of selling the XAUUSD at the beginning of the week was because of the sell pressure that started the week. That was one. And then secondly, we saw the breakdown of that support line of the pennant structure we identified on the 4 hours time frame. For the sake of clarity, and for those who are not part of the live session at the early days of the week, let me run through the 4 hours time frame so that you can see what I'm talking about here. So this was what we saw at the beginning of the week. We saw this consolidation phase, which evolved into this pennant structure, and with the lower highs connected, we had the resistance line here, and then with the higher lows connected, we had the support line here. And with this kind of channel, you all know what we look out for. Price action should either break out or break down that structure to give us a trading opportunity. And at the beginning of the week, we saw the breakdown of that support line here, which was a signal that we might be going bearish, but we never saw a retest of structure happen. So we were waiting for the retest of structure to happen, and we lost out in this opportunity at this point. And then we saw the breakout of the resistance line, which gave us that opportunity to be part of that bullish momentum that went into the $2,025 level. So this was how we took advantage of that bullish momentum here, and this was what we saw on, was it not on Tuesday morning live session, this was what we saw here and made us get ready for that momentum. So we saw our price after testing the 1,900, we saw a retracement into the 1,978, and since price action got into the 1,978, we saw price action go through a consolidation phase, which we identified duly, and you know what we look out for whenever we have this kind of structure. We want to wait for either a breakout or breakdown of the channel for trading opportunity. So with a sell stop order below the 1,978 and a buy stop order above the 1,982, we saw our price broke out of the 1,982 level, and price action continued to the upside, giving us about I think about 450 pips move there. We saw 420 pips move there. About that was a whooping profit for that, for just 2-3 hours on that one. Then we also had a breakout of the 1,990, which I told us that same day that we should be having a buy stop order above that structure so that we can take advantage of that trading opportunity. And that one also fetched us about 330 pips thereabout before the sell pressure resumed in this market. And during our live session yesterday, I laid emphasis on the structure here where price action has been trading within the 2025 and the $2,015 level. Remember, we identified the structure, and I was telling us that if price action start to find selling pressure, hold on a second, I will show you that. I think we had a chart for that one for yesterday, which I would like to share with you here. Okay, so this is what we saw here yesterday after expanding the channel that price action was consolidating within. So we mapped out the highest point price action has ever been for this week, which fell at around the $2,032 level, and then we had a support line at the $2,008 area. And this was where we were during the live session yesterday. We were around the $2,021.50 level, which was the key level I told us all that we shall be using to guide our trading activity for yesterday's trading session. And one thing I said here yesterday is that a continued selling pressure below the $2,021.50 level on our lower time frame will be an opportunity for us to sell, and that we are not buying the XAUUSD unless price action breaks out of the $2,021.21 area for a buy opportunity, where a further breakout of the 2032 will be welcoming additional position. And as you can see here, that did not happen, and on our lower time frame we begin to see sell pressure resume below the $2,021.50 level right into the second hour of the New York session, and boom, we had a sell position running yesterday, and I hope you took advantage of that move as price action rode all the way to the downside, hereby giving us about 190 pips in profit on that one. And for those who are part of this move, well done and kudos to you guys for being on standby to catch that move. And right now that the market is on pulse right now, well, there is nothing much to say here than to just acknowledge the current structure, and let's see what could be happening in the nearest future. Now, looking at the 1 hour time frame here and looking at what has been happening in the last 48 hours, it is quite obvious that price action, one, has been choppy. Two, within this old choppy scenario, you could see that there is a bearish tendency in this market as price action had continued to find lower highs. As you can see, we have lower highs in this market and we have lower lows in this market, hereby giving us something that looks more like a descending channel in this market, which further emphasizes the strength of the sellers at this point. And one thing I told you all yesterday regarding whenever price action finds new high, like the $2,032 level that was tested on Wednesday, this is the highest point price action has been this year, and it will take quite some time before price action gets acclimatized with that level before a breakout of that structure will happen. So whenever we find a new high, it is always characterized by choppy situations like retracement phases, consolidation phases, as the emotion that is dominant around that area is more of fear, as those who are taking advantage of price from the lower point at this point who want to be disposing some of their positions to quickly lock in some profit, and this will be reflecting on the chart in the form of retracement phases, choppy situation, consolidation phases, which we already seen around this area. And if you notice, the last time price action tested the $2,000 level as well, we saw this kind of scenario happen before the breakout of the $2,000 level happened. And I'm of the opinion that what is happening right now might likely be a retracement, so that buyers could gain some more momentum to be able to break out of that $2,032 level. Now, how far this retracement phase is going to go is what we don't know, but I'm very sure on Monday when we come back here, we should be able to monitor how price action will be reacting to the structure to decipher what our next line of action will be. So once again, congrats to those who took advantage of this bearish momentum during the last 24 hours. So on that note, I will be moving on to the next pair here, and I can see Cast comment. Cast wants us to do the EURUSD, I guess, so I will try to incorporate that before the end of the session. I think I still have some time. I will ensure that I talk about that before we close today, so try to stay tuned in, as I will call you out during the end of the session. Okay, Cast? All right. So 679, good morning to you. Glad to have you around. All right, so in the absence of no questions, I will be moving on to the next pair. I can see Adri Kiki wants me to do Bitcoin too as well. Okay, so we have two instruments to treat right now, so let's see if we can do that. Lucas 6789 wants us to do GBPUSD. Okay, we have three instruments, so I will try to run through all the three. I think I still have enough time to do that, so stay tuned in so that you can be part of that, because I will call your name at the end of when I'm about to treat it. So I want you to show yourself when I call your name. Okay, so let's move on to the next pair, and the next pair we shall be looking at is the GBPJPY. And on the GBPJPY, we at the beginning of the week, we have been selling actually, though we had some buy positions at the beginning of the week after price action broke out of the 165.200, which we were not part of anyways, as this happened prior to the beginning of our morning live session this week. And what we saw, what we were able to be part of, was the breakdown of the 166.00 level here, which happened after a little consolidation phase between the 166.400 level and the 166.00 area, and that was on Monday morning. And I told us all that we should have a buy stop order above the 166.4 for a possible trade continuation, or a sell stop below the 166.00 level to join a retracement to the downside. And that was exactly what happened, as we saw how price moved significantly well from that level into that demand zone here at the 162.800 to dovetail to over 300 pips in that direction. And during our live session yesterday, this was what we were able to identify on this current structure, as we saw how price action continued to find buy pressure around the 163.00 level, as you can see here. And this was a sign for us that the potential of buying pressure might likely be coming in at this point. And when we took into consideration the impulsive move that led into that structure, we had a simple setup here that looked more like a reversal pattern. As you can see here, price was unable to break the previous low, had the 162.800 giving us a higher low, and that was a sign that we might be in for a reversal pattern. And you all know, whenever we identify a simple setup like this, like a reversal pattern like this, all we want to be doing next is to identify a neckline area which shall be serving as the platform to validate that reversal pattern, and as well an area where we shall be looking out for buying opportunity. So we had a neckline situated at the 163.500 level, where a breakout retest of that structure welcomed our buy position. And since the breakout retest of that level happened, price action has moved over 81 pips thereabout, but we have been seeing selling pressure right now. And if you are still in this trade, you will currently be running with about 28 pips in profit. But one thing I would like to state here is that you want to ensure that you have moved your stop loss to secure this position. As worst case scenario, you can move your stop loss to your entry point just to secure this position. As you can see here, we have been witnessing selling pressure around the 164.00 level in the last 24 hours. And for me at this point, and considering what happened about 5 to 6 hours ago here, where we saw this candle closing in the form of a shooting star candle, it's a technical indicator that sellers are still very strong in this market. So it's very important that we secure whatever positions we have right now by moving our stop loss accordingly. Now that we are going into the New York session today, what is going to be our plans? What are we expecting to happen here, and how do we intend to position ourselves ahead of the New York session? Well, the first thing I would like to state here is the fact that in the last 48 hours, price action has been bullish, and we want to acknowledge the higher lows in this market. And if we do that, we did that yesterday here, and we had this bullish trend line. And if we bring back our candle chart and do some readjustment here so that it could touch all the trend, all these pivot lows in this market, you will see that we are already witnessing a situation here where price is appear to have broken down the trend line, which we still need some confirmations to give us the confidence to be part of a sell momentum in this market. And if I zoom out here and look at what has been happening since Friday's trading session, you will see that we have a bearish trend line which has consistently been respected by the sellers in this market. As you can see, if we connect the series of lower highs, we have a trend line figured out at this point. And if we extend this a little further, you will see that price appears to be respecting that trend line one more time. As you can see, we have that sharp rejection here, sharing a beautiful confluence with the 164.00 level, which further emphasized the strength of the sellers at this point. Now, to be able to sell the GBPJPY at this point, I would rather see a breakdown of the trend line. Then I want to see some sell pressure, resume on our lower time frame to retest the structure that was broken. It could be the retest of the trend line or the retest of the bearish trend line that has been pushing selling pressure since the beginning of the week, which also shares a confluence with the 164.00 level, after which I want to be looking out for more opportunities to join that decline to the downside. So these are things that we shall be looking at today so that we can be part of a sell momentum. So right now we've already cited the breakdown of that bullish trend line here, but we still need some confirmations to happen. So we still need some breakdown. This could take about 2 to 3 hours before it matures at this juncture. So we want to see a breakdown retest of the structure on our lower time frame for us to be part of a sell momentum to the downside. So we have a simple setup here. So as long as price remain below the 164.00 area and the bearish trend line that has been pushing bearish pressure since the beginning of the week, we shall feel comfortable in our sell position. However, if price action breaks out of the 164.00 level, price would have broken out of the bearish trend line, and that will have signaled that the trend line may no longer have the capacity to hold bearish momentum anymore. And if the breakout of that structure happens, then we want to be getting ready for a bullish momentum. But remember, we are not getting too excited at that point, and we should need some confirmations to happen right on our lower time frame, like a retest of structure or buying pressure above this level. Then we could join that rally to the upside. And the rally, if it does happen, has a tendency of giving us multiple entries, as we have key structures like the 164.400 level and the 165.200 level, for more trading opportunities in this market. So this is what we shall be looking at on the GBPJPY for today. So let's be on standby to catch any of this opportunity when they finally happen. You might want to screenshot my screen so that you can use it as a reference point to guide your trading opportunity during the New York session. So that is that on the GBPJPY. If you do have any questions, let me know in the comment section. So moving on, so let's take one of the pairs that was introduced to us. So the first one I would like to take here is the GBPUSD, which is actually one of the instruments that I have been monitoring since the beginning of the week. So let me share my idea with you and what I think could happen during the New York session today, and as we anticipate the NFP for today. So this is what we have been doing since the beginning of the week. And on the GBPUSD, I have a setup here, though I missed this bullish move just like I did on the gold, where I was actually expecting a bearish momentum, but I found myself caught up with the bearish expectation that I missed out on this bullish move here. And it was more of because of the breakdown of both the bullish trend line and the 1.23500 level, and then we had the bearish trend line. Then I had another strong selling niche around the 1.24200 level, which limited my scope on actually buying that GBPUSD. But with a buy stop order above the 1.24200 level on Tuesday, I had a buy position, and price action moved significantly, about 100 pips thereabouts, before the sell pressure resumed in this market on Wednesday. And since then, we have seen a situation where price has consistently respected a bearish trend line, as you can see here. But one thing about the lower highs in this market is that price is struggling to find a lower low, and that for me is a suspect that we might be having a bullish momentum in this market. Though even though I'm having a bullish bias on this one, I cannot ignore the potentials of sellers in this market, considering how price action has been relating to the structure in the last 72 hours. Now, I will be letting you know what I mean by that in a moment. So now, the first thing I would like to state here is the importance of the 1.24200 level within the structure here. And if you look at what has been happening around this level since last week's trading session, you would notice that this level has been a major determinant of price action along the line. Look at what happened here last week Friday. We saw a sharp rejection of this level by the sellers, and during the Monday session here at the beginning of the week, we saw another sharp rejection here, where sellers showed signs of trying to negate the attempt by the buyers to break out of that structure before the final breakout of the 1.24200 level happened on Tuesday. And since the breakout of the 1.24200 level happened, we have seen a situation where price has continued to trade above that level to further emphasize the strength of the buyers in this market. So you can see after the breakout of structure, we can see price has come back to retest that level here that was yesterday to support the theoretical expectation of a breakout retest of structure. And since price action retested the structure here yesterday, you will see that price action has been finding it difficult to break down below the structure. So price is here to break down the structure, and what we are seeing instead is a higher low in this market. And from a technical standpoint, whenever we start seeing higher lows, this simply means that buyers are gradually gaining momentum behind the scenes. And if you look at the structure here, you will see that we have something like a breakout of the 1.2420 level, which seems to be the key structure here. We have a retest of the structure, and there is a very high chance that price action might continue to the upside. Now, the question is this: how do we buy this one? How do we buy the GBPUSD if actually we are going to be seeing a bullish momentum? Where do we want to position ourselves ahead of this expectation? Well, it's a very simple setup we have here, nothing complicated at all. we are going to be using the bearish trend line as our yardstick for trading activity today. So remember, we had this bearish trend line figured out after connecting the series of lower highs, giving us a clue of how sellers are actually relating with the structure. Now, for me to buy the GBPUSD, I would want to see price action take out the sell positions along the bearish trend line to give me a level of comfort to buy. And at that point, it will only be a signal. Then we wait for a retest of structure or look out for buying pressure anywhere around above the trend line or above the 1.24700 level to join a trend continuation to the upside, and a further breakout of the 1.25200 level, a level which happens to be the highest point price action has been for this week, will welcome additional position for us on this one. So let's be on standby to catch that move if price action will be going to the upside. So that is the expectation here to buy the GBPUSD. However, if it so happens that the bearish trend line here continues to reject any bullish attempt in this market, then we shall be seeing this as a sign that sellers are still very strong in this market. So if that is going to be the case, I want to see price action drop below the 1.24200 level for a selling opportunity in this market. So price will drop below the structure, then I want to be getting in to sell the GBPUSD for today. So it's a very simple setup we have here, where we have three structures here that will be guiding our trading activity. The first one is the bearish trend line, which you can see here. Then the second one is the 1.2470 level, which will be supporting any bullish momentum at this point. And the breakdown of the 1.24200 level will be welcoming a sell position in this market. So that is my view here on the GBPUSD. Lucas, are you around? Let me know. Signify in the comment section if you understand what I just explained, and if you need further clarification, let me know in the comment section. Lucas, are you around? Okay, so Lucas is not responding anymore. Okay, let me go on to the next one now. So I will be treating cast comments. That is the EURUSD. So let's quickly run through the EURUSD and see what is happening here. So on the EURUSD, it's actually been a while since I traded the EURUSD, and that was due to the fact that since I've been monitoring the GBPUSD and the USD/JPY, I let go of the EURUSD so that it wouldn't affect my judgment on those pairs. But let's run through it and see what has been happening in this market. So let's go into the daily time frame here and look at the current market structure to see what has really been going on in this market. So the first thing I will do here is to acknowledge the trend of this. What's the market structure here? Is it bullish or bearish? So if we look at what has been happening in this market in the last how many months is that? Let's say 8 to 9 months, you would notice that price action has been very bullish on this chart. And if we bring out our line chart to connect the series of higher lows here, we should be having something like this. We have a bullish trend line which acknowledges the strength of the buyers in this market. So I will be thickening this a little bit, and then at this point I want to acknowledge the highest point price action has ever been this year, which is the 1.00950 level. That's a very strong psychological level as well. So we shall be labeling that the 1.00950, or should we just approximate it to 1.1, I guess, so that we could just find a psychological level to map out around that area. So when we bring out our candle chart, we should be having something like this. So let's map it out at 1.11. Okay, so we have the highest point for this year around that area. So price is gradually approaching the 1.100 level. Now the question at this point is Will it break out that structure? Is it going to break out that structure to the upside to continue a trend continuation, or are we going to be seeing selling pressure resume just like it did at the beginning of the year to incite a move that will break down that bullish trend line to the downside? So these are one of the things we are going to be looking at when we scale down to a much lower time frame. So what I will be doing now is to scale down to the 4 hours time frame. Let's see what has been happening here in the last couple of weeks. Now look at this area here. So in the month of February, we have a beautiful demand zone just right around this 1.00550. so we shall be acknowledging that 1-2. So we have a demand zone here. So my demand zones are always inside the box, and my labels are always inside the box, and I always like to make it a dark area. So we have the demand zone here. So that is our demand zone in the month of February, and not until the mid-month of March that we started seeing that strength of the buyers come in. So if we bring out our line chart here, we want to connect the series of higher lows. So we have been seeing a bullish momentum since the second half of the month of March. Now, one thing about the bullish trend here, if you look at this closely, you will see that the impulse leg of that bullish momentum is gradually reducing as soon as it springs out of the trend line. So this is what I simply mean at this point. So if we look at the first touch of the bullish trend line, you can see the impulsive move here. Then if we compare this leg with the second time price action tested the bullish trend line, you will see that it has reduced significantly, even more than half of the previous impulse leg. And what this simply tells us is that the momentum is gradually reducing in this market, and with a gradual reduction in momentum, it's a sign that sellers are gradually taking over from the buyers in this market. And whenever I start citing a reduction in bullish momentum, what I want to be looking forward to is a breakdown of a bullish trend line for me to join a sell momentum. But before we acknowledge that, we want to identify a key level that we shall be using to guide our trading activity. So right now we have a key level sitting at the 1.09150, which I will be identifying here. So I always like my key level to be golden in color, as this would, okay, so we have gold color here, and then we have it at the 1 point, do I still have that again, 1 point what again, 1.09150, 1.09150 level. So that is our key level there, and I would like to place this at the top right hand side of my screen so that we can see it clearly. So that's it right there. So we have a key level right now sitting at the 1.09150, and what this key level normally does for us is to help us to guide our trading activity. Now, if price action continues above that key level, then we might be in for a bullish momentum, or if price action now drops below the key level, which obviously shares a beautiful confluence with that bullish trend line, then we shall be anticipating a sell momentum in this market. So let me give you a visual representation of what I'm talking about. So we have the last time price tested the bullish trend line, we have this impulsive move. So this might turn out to be a retracement of that impulse leg, where if price remains above the 1.09150, then it could turn out to be a bullish momentum, where we want to see our price action will be reacting to the 1.1 level to decide if we are going to be buying, that is if it breaks out that structure, and if selling pressure resumes below that level, then we might be in for selling, where a breakdown of the trend line will confirm that the trend line is no longer strong enough to hold bullish momentum. So that is the first scenario here. So between the key level and the 1.1 area, we have about 100 pips thereabout. So the tendency of a buy momentum around this area is still very possible. So if we are going to be buying, we want to be looking at an area just right around the 1.09350 to buy. So let me thicken this a little bit So we should be thinking a little bit like that. Okay, so we should be having somewhere above this level. As you can see, this is an impulse leg. Hold on a second, let me show you. This is an impulse leg. Price drops, retraces back into structure. We saw an engulfing candle. Price remain above the 1.09150, our key level here, and if the buy pressure continues, then a breakout of the 1.09350 level will be welcoming a buy position for today, and we might rather move all the way into the 1.100 level, where I said depending on how price action reacts to the structure will determine if we are going to be adding more buy position or getting ready to sell at that point. So that is the buy perspective here in this current market. So you can see how the 1.09150, which happens to be the key level, is supporting our trading opportunity in this market. Then the second one is if price action, instead, if it does not climb up, but instead it drops below the 1.09150, and we continue to see selling pressure below the 1.09150, then we might be in for a bearish momentum, and this will have confirmed the loss in bullish momentum that we have been witnessing right from the bullish trend line that we observed earlier. So selling pressure below the 1.09150 will confirm sell position, and if you can see what is happening here, that will also have broken down that bullish trend line, which will be the first time price action will break down that trend line in the last 3 to 4 weeks in this market. So this is what we shall be looking forward to buy or sell the EURUSD for today. So you could have your sell stop or buy stop order placed strategically so that you can catch any of these opportunity here. So I hope Cast is around. So if you are around, let me know if you well understood what I just explained, and if you need some further clarifications, let me know in the comment section. So I hope Cast is around. If you are around, kindly signify yourself and let me know you are still part of us. Okay, so I'm already out of session, out of time right now, but I would like to take the BTC USD, which who was that again that mentioned BTC USD earlier? Let me see. Can I still find it? Uh-oh, I can't find it anymore. Someone mentioned BTC USD earlier, or am I mistaken? Okay, I think it's Adrikik. Yes, he said was asking if the BTC is going up. So let's run through the BTC USD in a moment, and we call it a day. Okay, so this is the daily time frame. So I already have structures mapped out on this chart before, because I have the BTC USD. I treat the BTC USD as a positional trade. So I invest in it, I buy it at strategic points and then sell. So it might take a long time. I hold the position for like a month before I scope in my profit on this one. So I already have a structure here on the daily time frame, which shows that price action has actually broken out of these key structures. Now, with a look of things now, considering what has been happening in the last couple of months, we have another key level at the $25,000 mark, which is a very strong psychological level that is very important that we acknowledge at this point. And that is the $25,000 mark, which falls somewhere around here. Hold on a second, I will find that out in a moment. Okay, so we have the $25,000 mark here. So let's label it for the sake of clarity. So we have 25,000. Bolden it a little bit. And if we go to as far back as the month of August last year, you'll see that this was the highest point price action has ever been since the month of August. We saw selling attempt here. Price action broke out of that level and we saw this huge impulsive move that started during the second week of the month of March, breaking out of key structures like the 21,500, the 21,000, the 25,000, and then we can see how as soon as price got into the 29,400 level, we begin to see some selling pressure around this area, giving us a clue that there is an indecision at that particular point in time. Now, our center of focus for the BTC USD is going to be around this area, as we can see consolidation phase happening around this level. So what we are going to be doing following this impulsive move is to try to understand how participants in the market has been reacting to this level since the third week of the month of March. And what I will be doing is to acknowledge this point first of all. So we have the 29,400 level, so that's the resistant point. So in the last 1 month, price could not break out of that structure. So we have 29,400. Am I correct? Okay, so we have a 29,400. I'll give this a purple color, and this one I give this. Okay, so we have the 29,400, and we should be having the support line of that channel. Hold on a second. If we bring out our line chart, we should be able to figure that out. Okay, so we have it at the 27,150. Okay, 27,150. All right, so we have a support line there, and you all know what we look out for whenever we have this kind of simple setup. It's a very simple setup to look out for, and we always want to see price action either break out of the resistant line at the 29,400 for buying opportunity, or the breakdown of the 27,150 for selling opportunities. And if you look at the structure here, considering those who took advantage of this bullish momentum right around the 19,500, you would agree with me that this a retracement phase seems very long overdue in this market, where this could turn out to be a reversal pattern where the breakdown of the 27,150 could incite a retracement into structure or into our golden zone area before the anticipation of another wave of bullish momentum could happen. So this is one option that is very possible at this point. Then the other one is this could turn out to be a trend continuation pattern where price action transitions into either a bullish rectangular pattern or a flag pattern that leads to the breakout retest of the 29,400 to incite a trend continuation to the upside. So in order to now have a better perspective into what is going on here, we would need to scale down to a much more lower time frame, and for that I would want to go to as far as the 1 hour time frame in this market. And when we scale down to a 1 hour time frame, you will see that the market is very choppy in this situation, and it is very risky to join a position within a consolidation phase here. So it is important that we remain very patient at this juncture in the market, where we look out for a breakout to happen, springing out of that channel. Then we could join any trading opportunity. But if you are a short-term trader or a scalper, and we scale down to a much more lower time frame, let's say the 15 minutes time frame in this regard, and we bring out our line chart, we should be able to identify a short-term expectation in this market. So I will look at what happened here since the first week of this month. So we have a situation here where price has been bearish, and then we have a support line somewhere around 27,850 27,850 level. Okay, so now this area has been a strong demand zone for about 2 weeks now, and if we bring this up like this, this is a strong demand zone here. Let's label it for the sake of clarity place it at the right, the center inside of the box. Make it a little bit bigger and make it darker. Okay, so we now have a demand zone here where you can see every attempt by the sellers to break down the structure has been met with strong resistance from the buyers rather. So this is a structure here on the 15-minute time frame, and the only way you want to be selling the BTC USD at this point is to see price action break down the 27,850 selling pressure below that structure. Then you could sell the BTC USD at this point. But if it does not break down, you just hold on and wait. But to buy the BTC USD, I want to see price action take out the trend line here, that is breakout of the $28 mark, which I would like to also acknowledge so that it will make things a little bit easy for us to. Okay, so we have it just right around here. So we have the $28 mark. Let's label that out also. So it's always good for us to map out our structure so that we don't get things twisted when price action start moving sporadically. So now we have a simple setup here on the 15 minutes time frame where a breakout or breakdown of this structure will be giving us an opportunity to trade in this market. So let's be on standby. If a breakout of the 28,000 of the bearish trend line happens, then we look out for buying opportunity above that structure to join. And if a breakdown of the 27,850 happens, we want to be selling at this point. So these are my views here on the BTC USD. Is Adrikiki around? If you're around, let me know in the comment section. Cast, okay, I see your comment, Cast. Glad to have you around still to the end. And on this note, I want to be calling it a day here. So it has been a wonderful moment with you guys, and I look forward to seeing you next week Monday as we get prepared for the new week. And I wish you a merry holiday, and to my Christians brothers and sisters in the house, happy Easter to all of you. Do have a wonderful weekend, everyone. Bye bye.